What is up guys, my name is Ignas, welcome back to the channel. We have spent the last few weeks analyzing and comparing dividend paying stocks from various healthcare industries, and now I have picked a short list of names that I want to see in my portfolio and feel confident about adding money into them going further. So I will be bringing up the 3 names that I've picked and share on why there is potential in them right now and going further. An early thumbs up would be very much appreciated, and with that out of the way, let's start. So the first stock is from drug manufacturing industry, Merck, ticker symbol MRK. In the last 5 years, the stock is up for 41.5%. Company's market cap is now at $218 billion US. We have the price to earnings now at 13.18, and the stock is trading at a dividend yield of 3.21%. So what exactly caught my eye on this name? One part is the price to earnings ratio. In 2017 that was at 29.62, then with earnings going lower PE went up to 107.19. In a year in 2019 it dropped to 21.31, then in 2020 we saw it at 17.62, in the middle of 2021 it went up to 34.13, and with earnings going higher, this year we now have it at 13.41. So looking back at this 5-year history, there hasn't been another time where the stock was trading at a price to earnings ratio of under 14. This means that buying the stock right now, we are getting the best price to earnings ratio of the last 5 years. Another part I'm bullish on is the change in the number of shares outstanding. So back in 2017 they had 2.75 billion shares out. Then in a year in 2018 it was decreased by 2.03% to 2.69 billion shares. The largest decrease was in 2019, minus 4.01% to 2.59 billion shares, and then a 2% decrease with 2020 at 2.54 billion shares outstanding. Now for the next 2 years the number of shares out didn't change much, but if we calculate how many shares they bought in 5 years, the number comes in at 0.212 or 212 million shares out. So it means that the company bought back over 200 million shares in the last 5 years. Now let us take a look into the dividend yield. And for that we use my dividend investing watchlist on Google Sheets. So on average in the last 5 years, Merck was trading at a dividend yield of 3.03%. This means that the worst time to get into the stock was back in 2019, where we saw the dividend yield at 2.5%, under the 5-year average for 17.53%, and the best yield was in 2021 at 3.56, over average for 17.44%. But even though the dividend yield did go lower this year, if we take the stock right now at 3.18%, that is still over the 5-year average for 4.9%, meaning that buying the stock right now, we are getting a dividend yield that is almost 5% higher than it has been in the last 5 years. Now if you would be interested in doing a similar analysis for a dividend paying stock yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise feel free to leave a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunities available in the market that I'm still missing. My second stock pick is from the medical devices industry, Medtronic, ticker symbol MDT. In the last 5 years the share price didn't do so well, went up for only 9.79%, though the stock peaked in September of 2021, where we saw it going up for over 68% from 2017. Currently we have the company's market cap at almost $117 billion, price to earnings ratio is at 22.74, and they are paying a dividend which now comes in at a yield of 3.09%. Now let us take a further look. So Medtronic's current dividend yield is 3.08%, which may not be the largest, but it is almost double of where we have the average yield from the healthcare sector at 1.58%. But that is not yet the best part. We here have the number for the years of consecutive dividend increases. So it shows for how many years the company has increased dividends for at least 1 quarter every year. This means that Medtronic has not only paid dividends for over 4 decades, but they have also been consistently increasing dividends for the last 46 years. Now this dividend moving up also appears on my watchlist. So here we have Medtronic's dividend yield history of the last 5 years, and on average it was trading at a dividend yield of 2.04%. So we saw the worst yield in 2018 at 1.02%, under average for 49.99%, but by the end of 2021 it has been moving up, and now it is at 3.12%, over the 5-year average for 52.98%. So buying the stock right now, we are getting the best dividend yield that we have seen in the last 5 years. Now another bullish part I have for Medtronic are the analysts' price targets. So on Yahoo Finance we have information on price targets from 22 analysts. The targets range from the lows of $85 to the highs of $142 per share. On average they come in at $109.20, and the stock is currently trading at $87.99 per share. So if we take the average price target and divide it by the current price, this means that for next year, on average, analysts predict that the stock price should be going up by 24%. So quite a decent return, more than 2 times the market's long-term average. Now for the third name that is from the diagnostics and research industry, Thermo Fisher Scientific, ticker symbol TMO. They had an awesome return in the last 5 years, with the stock moving up for 196.01%. Company's market cap is currently at $215.71 billion. They are trading at a price-to-earnings ratio of 29.29, and they are paying a dividend which is currently at a low percentage of 0.22. But why did I pick this low dividend payer for my dividend portfolio? This is here one of the reasons. This number is the dividend payout ratio. It shows what part of company's earnings are being paid back to investors as dividends. So Thermo Fisher now has the dividend payout ratio at 4.91%. So that is still a very small part of the earnings that they get, and if we assume a healthy payout ratio of under 50%, then we may assume a 10x opportunity in their dividend payout, putting their dividend yield at a reasonable 2.2%. And it looks like that the company is also quite committed to growing their dividends. Here we have Thermo Fisher's 5-year compound annual dividend growth rate, with the next year's estimate currently coming in at 12.03%. So with such growth rate, they would be doubling their dividends every 5 to 6 years. The yield on cost will look really good in just a few years. And it seems that their market is not shrinking at all. We have Thermo Fisher's revenue history of the last 5 years. So in 2017 they were bringing in around $19 billion on the trailing 12 months. Then in 2018 that increased to $23 billion, plus 21.8% for the quarter year over year, several billion increase in 2019 to almost 25, and then 26.2 billion in 2020. But after the pandemic slump in 2021 it came in at $38 billion, a quarterly increase of 34% year over year. And now with the second quarter of 2022, we have it at $42.8 billion, plus 18.3% for the quarter year over year. So in the last 5 years, we haven't seen one quarter where there would be a decrease in revenue year over year. So every quarter going further is larger than the one they had in the previous year. So these 3 will be the names that I'm buying for my portfolio's exposure in the healthcare sector. But if you have been to my portfolio tracker on Google Sheets, the link for it is at the top of the description. I'm actually holding more healthcare names than those 3. But hopefully over time, I can switch that capital from the ones I'm not interested in to the names I am bullish about the most. In the meantime, I will be buying with the money I'm consistently adding every month. So that was it. Make sure to support the channel and leave a thumbs up under the video. Are you buying any of the healthcare stocks that I've mentioned? Share your best picks in a comment below. If you would be interested in getting access to my stocks watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share all my documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I've looked into several companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.